Hey traders, Raghee here. Let's just dive right into it in this free video, and that is a question that I'm getting a lot, which is, Raghee, was this the plunge protection team, and is the plunge protection team real? So let's have a quick little history lesson here for those of you that don't know. So the plunge protection team name, that name was given by an article in the Washington Post back in 1997. And the plunge protection team itself actually does have a real name. It's called the President's Working Group on Financial Markets, and it was formed shortly after the 1987 crash, if you want to call it that, by comparison anymore. But yeah, it was a crash. And the President's Working Group on Financial Markets was actually created by executive order by President Ronald Reagan. So yeah, there is a plunge protection group. It just happens to be a legit thing called the President's Working Class. So yes, so we have that plunge protection team, plunge protection group, whatever you want to call them. So there was a phone call that was made. There was a lot made about this phone call that Treasury Secretary Mnuchin made to the banks. And the working group, again, this executive order signed by President Reagan, the working group has some team members. There are some folks that are part of this group, this team. And it's the Secretary of the Treasury. It's the head of the Federal Reserve. Okay. It's also I believe the chair of the SEC and also the chair of the CFTC. All right, so those groups consist of those folks, and I guess whatever team they employ. And there's a lot of different rules. I mean, that's kind of more than what you need to know is, yeah, it's real, and phone calls were made, and is this then the result of this, what we had today? I mean, the Dow's never been up like this before. You're looking at historical moves, and that's going to bring us to a second question, which is, has the bear market bottomed? And we'll get into that in the premium video. But let's talk about why we're in a bear market to begin with, and why this bounce is a bear market rally, why I will continue to consider this a bear market rally. So first of all, gang, a bear market isn't simply because the equities markets are down, or down a lot, or down 20%. I mean, 20% is the sort of number that people talk about a lot to call it bear market territory. I just call it a crash. If something's down 20%, that's a crash to me. And we can see that across all the major averages, all right? And including most emerging markets, most if not all emerging markets. Probably Brazil would be kind of an obvious exception to markets that are in this, as I call it, the D stage of the economy. And that's what we're going to talk about here for a moment. What makes a bear market? Why would I call this only a bear market rally? Because the bear market is not because equities are in a downtrend. I know that may seem incorrect, but let's talk about what makes an economy weak, or just an economy that's more susceptible to seeing sell-offs in stocks. It's when we have slowing growth, and that would be measured by the GDP. It's when we have flatter or basically contracting inflation numbers. That could be your CPI. That's what I like to look at. And it has to do a lot with monetary policy. And monetary policy right now, gang, out of the FOMC's mouth, is still hawkish. They have not switched to even neutral or dovish yet. We are still in what's known as a downturn, bad data. Some people just call it the damn it stage of the economic cycle. And I'm not being facetious. There are four different cycles. You have the accelerating, the breaking out, the cooling off, and the downturn. And again, the characteristics of this D stage are growth heading lower, inflation heading lower, and you start off this stage. We are in the early stages of it with a hawkish central bank. It eventually goes neutral to dovish. So we haven't even seen that transition in the monetary policy yet, which would naturally then get us to the A stage, where you have a dovish central bank, or a neutral to dovish central bank, and you've got growth on the climb, you've got inflation on the climb. All right, so for those of you that are wondering, what gets us into this stage, and I'll get into this a little bit more, but realize it's not just the stock market. In fact, it's not the stock market alone at all. It's the stock market is the last one to sort of show the signs of a strong U.S. dollar, weak emerging markets, peak bond yields, okay? Also peak inflation. All right, what else are you looking at? We're looking at weaker crude. And by the way, gang, crude had a big bounce today. Let me just show you what bear market bounces look like. And we were seeing them in Italy, which were short. We're seeing them in France, which were short. We're seeing them in Germany, which were short. But I don't want anybody here thinking that candle, forget undoing the bear market. Crude oil bouncing doesn't undo a bear market. This one hasn't even really significantly corrected the downtrend. Let me just show you all the Dow. I'm going to use a Dow because it's up over 1,000 points. This doesn't even really significantly correct the downtrend. What you'll find moving forward, bear market rallies, because there is such an overwhelming amount of bullish bias in equities especially, are violent short squeezes, okay? And today's rally doesn't undo any of these things. Strong dollar, weak emerging markets, peak yield, peak inflation, weaker crude. What else is happening here? There's a lot that goes on, but just kind of the broad strokes. High beta names are still weak. High beta names are still in downtrends, gang. This is a bear market bounce. What else is weak? Copper is weak. Commodities generally are still weak. The FOMC, gang, is still withdrawing liquidity. Right? We don't have what global markets need historically to grow, and that is a supply of U.S. dollars, right? With the current account deficit narrowing, the FOMC is still in a tightening cycle. They're still unwinding their balance sheet. We're not seeing dollars being pushed out into world economies. And so these are all parts of the dollar cycle, parts of the economic cycle, and today's rally, no matter how wonderful it may have been, if you're long or watching the overall down move, this doesn't undo it, gang. I hate to be the bearer of bad news. This doesn't undo it. And I'm talking historically, this does not undo it. Now, could we start to see maybe this market find a range? That is true. Doesn't mean the markets are going to go punch down to lower lows tomorrow, but just heads up for January, gang. We can see what happens year end here. Today was a heck of a move, but we are still in a bear market.